Welcome back to my channel. If you're new here, my name is Jermaine. I'm the founder and the owner of Visionary Accounting Group, where we help nonprofits build strong, compliant, and financially resilient organizations. And today we're going to be talking about 5 critical mistakes that nonprofits make when using QuickBooks Online and how to avoid them. And so if you're using QuickBooks Online, or if you're even thinking about using QuickBooks Online and you want to make sure that you're not making these mistakes, stay tuned. So mistake number 1 is not setting up a nonprofit specific chart of accounts. There are a lot of times that I first start working with an organization, I go and I run their financials and I'm seeing, generic categories like sales or nonprofit income. And I'm like, okay, what is that, right? What's made up in those accounts? I think the biggest thing is making sure that when you first even get into QuickBooks Online, that you take a few steps. The first thing is that you want to make sure that you go to your advanced settings and you want to make sure that the account is, you've actually identified that the account is for a nonprofit organization and that the tax return that you file is Form 990, because when you do that, it triggers certain things in QuickBooks Online. You also want to make sure that you're noting that you don't have customers, right? You have donors. That should be changed. You want to make sure that when you make these changes that then the report titles have changed, right? So instead of a balance sheet, you should be seeing statement of financial position. Instead of an income statement, you should be seeing statement of activities, right? So that's just a few examples. But the idea is that when you first get in, you should be customizing it. And so once you're setting the stage that this is a nonprofit organization, when you look at that chart of accounts, QuickBooks gives you just a generic version. And I appreciate how they try to set you up so you don't come in with a blank canvas, but the setup, to be honest, is usually not nonprofit specific or even really touches nonprofits at all, right? And so you want to make sure that you then go in and you actually customize it to your organization. So what type of income do you have? Are you getting donations from individuals? Are you getting grants from corporate entities? Are you getting grants from private foundations? Are you getting grants from other nonprofits? Like, you want to be specific, because it's not enough to just say we got, I don't know, $1 million last year, but it's like, where did that $1 million come from? What type of funding it is? And so you want to make sure that you have a very nonprofit specific chart of accounts. Mistake number 2, and I have probably talked about this till I'm blue in the face, let me know if y'all are over it, is not properly using classes. And so I have seen classes being used to track restricted versus unrestricted income. I've seen classes being used to track actual grants. And I understand the logic there, but the only problem with that is there isn't another feature that truly is set up to track functions, but there is to track grants. And so I would suggest not using classes to track grants, right? And so classes should be used to track functions. That's it. Functional expenses. So at the very high level, you should have 3 classes: admin, fundraising, and programs. And then I actually do suggest going and building out sub classes for your fundraising class and your program class, so that you can specifically track the expenses for each individual program that you're running and each individual fundraiser that you're putting on, so that one, so that you can easily pull how much was spent on program A, how much was spent on program B. Same thing for the fundraisers. If you're running a campaign or you have an annual gala or something like that, you can actually pull, okay, so this costs us X amount of dollars every year, and we only raise X amount of dollars. So does this make sense? Or we raised way over that. This is great. But you can't even make that decision or actually get that data if you're not tracking it properly. And so you want to make sure that you're using classes to track functional expense. And then as far as grants are related, this is like a little 2B or 2A rather. There's a couple of things that you're doing with that. If it's grants with specific stipulations, you're going to be running reports. You actually have a number of ways to do that, which is why I don't suggest doing it in classes. And so the first thing you need to be thinking about and making sure is that every funder that's tied to the grant is put in QBO as a donor, right? So anytime income hits the account, you should be indicating who it came from, so who that funder is. But then also, if you're going to be doing specific like reporting, you can set up that particular grant for that funder as a project. And when you turn on projects, not only when that income comes in are you indicating who gave it, but you're indicating the project, right? So whatever that grant is, and now you can not only put income to that project, you can also put expenses Then you can run reports and you can clearly see for grant A, this is how much we received or are expecting to receive. This is how much we spent. Boom, your details right there. You can run P&L by, funders. Like you get more options. You have the ability to do different things with features. It's good to first determine what are you trying to get at. So like, what does the end result need to look like? What is the end product that you're trying to get to? Because then that will determine which feature works best. You don't just want to use it because it's there. You want to use which one makes sense the most. The third mistake is generically classifying income. And I talked a little bit about this in mistake number 1, but let's dig deeper. I've recently been going through having to more deeper explain why we work the way we work. And what I'm finding is that when organizations, kind of come into our orbit, they want to offload their accounting, which is great because that's what we're here for. But I think there's a misconception that you can just offload and like we just take it and run with it. And while that's partially true, this is a collaborative effort, right? And so there are certain things and information that we need from you in order to make sure that your books are categorized, in order to make that the bookkeeping is done accurately, thoroughly, to make sure transactions are recorded and categorized correctly, right? And that things have been broken down. For example, income is coming in and, we see a deposit, but the deposit slip notes that you got $200,000, but that was made up of 5 different checks. Well, when I look in QuickBooks Online, my expectation is not that I just see $200,000. I should be able to see $200,000 from person A, B, C, D, E, right? And how much A, B, C, D, E gave, right? I don't expect to just see this lump sum and no details. And what I'm finding is that it probably is coming across that we're asking a lot of questions, that we're digging in a lot, but it's only because we know how specific things need to be, because things come after it. It's a catalyst, right? Things come after it. And so you do accurate, thorough bookkeeping. When audit time comes, there's no question, because you know what's going to happen? If it gets picked up, the auditor is going to want to know. If they see that there's more to this deposit or whatever, they're going to ask, well, then why was it recorded that way? And then the second thing is tax time. Like, we prefer to save time on the back end, right? And what I mean is that we're going to put in all the time on the front so that when audit and tax time comes, that moves smoothly. But I think sometimes there's this misconception that it's like, why is this taking so long? Why are there so many questions? And it's because you have to be thorough. Do you want accurate books? Do you want complete books? Do you want to be able to really get reports that explain what's going on in your organization? If so, then this is what's required. And I think that's the misconception, that accounting is just some, yeah, we need the money, but that's it. There's no more thought as how well this needs to be played out, like how detailed this needs to be completed and how thorough we need to be. And the only way that you can have reports that give you data that you can even remotely make decisions off of is by taking the time on the front end to do the work. That's it. Do the work. Mistake number 4 is not tracking or releasing restrictions. And so when you get income, donations, contributions, grants, whatever, and it is restricted, one, we need to make sure that we deeply understand what those restrictions are. And there needs to be a consistent cadence to which we're releasing restrictions as this money is spent, so that we can actually account for how much is actually left. Like, we need to know how much is actually left. And the only way that we can determine that is by making sure we understand when income comes in, what is restricted, what those restrictions are. And then when we're doing the bookkeeping, we can make sure that that restriction is released. I see often all of these restricted grants sitting on the balance sheet and they're just there, like nothing is happening. And then typically when you ask the question, it's been done this way for so long that no one really knows. And then we're stuck trying to figure out what is the actual balance? How much did you actually spend? And so there needs to be a process for which not only are you tracking it, but then are you releasing it? Like, when you look at the financial statements, are they correct? Like, do we know what's going on, right? So make sure that you are not just putting things on the balance sheet and not having any way to come back and make sure that this stuff is correct. Last one, and it's kind of related to mistake number 4, is just letting balances roll over. And so typically and this is normally what's happening on the balance sheet. So typically we're looking at the balance sheet in QuickBooks Online and we're seeing Prepaid expenses is a common account where I see is not really tended to. AR, believe it or not, you know, putting in pledges, but then when they come in, you're not actually applying it to the invoice. And so then you're double counting the income. But more than that, this balance in AR is just staying on month over month, just staying on the balance sheet. And then, like I mentioned with the restrictions, so we're seeing restricted income, you know, or we're seeing, you know, these restricted funding that you receive and it's sitting, you know, it's being put on the balance sheet, but nothing. I can't tell, like, did spending happen? Is this balance accurate? Was there any release? Like, nothing. Balances are just rolling over. And the other thing I've noticed with that is that audits are often happening and no adjustments are being made to these balances. And that's also concerning because then you have 2-3 years later, you get a new auditor, and they're asking the question and we don't know. Like, we have no clue. And so I think the other key is like, you as the organization, the executive director, you own the QuickBooks Online accounting system. You own the financial statements. So it doesn't matter if you have a bookkeeper. It doesn't matter if you have an accounting team. Ultimately, the auditor, your tax preparer, your independent CPA, whoever it is, your board, they're going to be looking to you for answers. And so regardless of who's assisting you and doing work, you know, behind the scenes, you have to know the answers to these questions, or you at least have to be able to refer to something, someone. And so these are conversations that you have to be having consistently so that if they ever come up, you don't look like you don't know what's going on. Honestly, that's truly what it is. Like, you don't want to look like you don't know what's going on, because that signals, are you properly stewarding these funds? If you don't know what's happening with the financials, it's a cause for concern, because then it's like, are you mismanaging or mishandling the money? And so you want to be very mindful and very careful. That's it for this video. Quickly talking about 5, you know, critical mistakes that nonprofits make in QuickBooks Online and how to avoid them. If there is any other issue that you're dealing with, please put it in the comments. I'm looking and sourcing video ideas as we move into the new year. And so if you have any questions or want me to dive deeper into anything, put it in below. Put it down below. If not, I'll see you guys in the next video.